Hi everyone, let's go through all my preferred and alternative scenarios, including potential trading setups and some new scenarios as well. Starting on the macro with the bullish scenario, where this is a 1, 2, 3, 4, 5 with inside this wave 4, not an impulse to the downside, but a WXYXZ. This wave 4 bounced perfectly on the 0.5 fib, taken from the low of 2 to the high of 3, while also being at the 0.618 fib time, also taken from the low of 2 to the high of 3, the exact week, exactly on the 0.618 as the low is very nice confluence. We then also had a high volume peak here at the lows, which can signal a reversal area, just like it did at the end of wave 2 over here. Very high volume in the final red candle of this wave 2, before then a very impressive move to the upside to the all-time high that we have standing right now. If we then look at potential wave 5 targets, the most common target box is over here, the white one, between 98k and 174k, and the more rare target box is between basically the all-time high and the 1.236, which is sitting at 98k. If we then go to the bearish scenario, you will see that this wave 4 over here is relatively short in a 1, 2, 3, 4, 5. Usually wave short is longer in time than wave 2. However, in this particular scenario, that is not the case. So I might prefer the bullish scenario a bit better based on this impulse over here. But nonetheless, this scenario is definitely on and not invalidated. More locally, we're then looking for a 3-wave in a W, 3-wave in X, and then 3 waves in Y, with at least a minimum target of 12.6k. And also the wave X over here usually has a minimum target of the 0.382 pulled from the all-time high to the low of W, which is sitting at 29.6k, and also has nice confluence with this support resistance area that we are now or very close to backtesting for the first time since basically 2022. So we had a big move down, coming back up, and it would be a very attractive potential short setup where the shorts can be laddered in this area, stop loss safely above, and then trading it to the downside. If we then go to the high time frame scenarios, I have 4 scenarios that I quickly like to show you. The first one is basically this ABC on the high time frame. So we then have this as a first wave, an impulsive wave. Then we have this as a 3-wave move to the downside in an A. Then some sort of a 3-wave B and looking for a C. I've seen this scenario online and I do not agree with this being a legit scenario. And there's actually 3 main reasons. The first reason is, and that's the most important one, is that if this is a wave B expanding flat, because now it's an ABC expanded flat, that's what we're looking for. The most common wave B target is the 1.236 and the 1.38, with a rare target for the wave B being the 105, which is below here. There is, however, another rare target above this level. Now, I would agree if we would wick above this level, then eventually close inside and move to the downside, or maybe close like one candle above the 1.38 and then move down, but that's already, you know, on the edge. But now we have multiple candles above the 1.38 closing, and I even think we also closed a weekly, we now closed 2 weekly candles even above the 1.38 as well, which is definitely something I don't like to see. Second, if this is a B, C move in then this wave B, as it's an impulse correction impulse move, the wave B over here just missed out on hitting the 0.382 fib over here, as you can see if I zoom in. And that is not something you like to see, as for a wave B, the 0.382 is by far the minimum target for a wave B. Like, this is already a rare target, relatively rare for a wave B. And it missed out on hitting that, so that's not really something you like to see. Of course, it's crypto, it's volatile, these things are possible before then eventually a potential wave C, but in the overall scenario, this is not something that helps, if you know what I mean. And then finally, we also have this ABC. Now, the most common target for a zigzag ABC is the 1-to-1 over here, sitting at 32.5k. But as you can clearly see, we stopped at the 0.618. Now, the 0.618 is a rare target for a zigzag wave C. But if this is a rare target for wave C in confluence with a most common area for wave B that we've gone above, and this wave B in this ABC that didn't even really hit its rare target, like, those 3 reasons make this scenario for me very unlikely. Then we have the very bullish scenario, where this is again wave 1, but now wave 2 is already finished and we're looking for upside. The main problem I have with this scenario is that this wave 2 is so short in time, that is. So if we look at this being a 1, 2, 3, 4, 5, this wave 1 took a particular amount of time. And if we then take a Fib time tool from the low over here to the high of wave 1 and you double click here, toggle on the 0.386 and the 0.382, you'll find these vertical lines on your chart and you'll see that this wave 2 ended basically around the 0.236. Now a wave 2 usually ends at least the 0.382, if not behind the 0.382 at the 0.5, 0.618, or even the 1-to-1 of a wave 1. So this is very, very short. That's very uncommon and also very rare. But in this scenario, one would be looking to the upside with a minimum target of at least 43.3K. But wave 3 is usually extended, so it can go a lot higher. If we then go to the, for me, most preferred bullish scenario, we are here looking for a WXYXZ to the downside. X, however, just missed out on the 0.382, but that can happen. Wave Z hit its rare target, the 0.618, pulled from the high of W, low of W to the high of X. But this is fine. This is a good target still for Wave Z, even though it is rare. It is a target nonetheless. If we then look at this impulse over here, we can see again 1, 2, but then this is a wave 3, this is 4, and this is the final leg for a wave 5, finishing the yellow one before we would now expect a move to the downside in a yellow wave 2, before then a big push to the upside in eventually a 3, a 4, and then a 5. Now what's nice about this scenario so far is also the volume, as this is then a 1, 2 and then wave 3. Wave 3 has the most amount of volume. Wave 4, volume dying, exactly what you want to see. And then if this is the push, the final push in a wave 5, then so far volume over here has been lower than in wave 3. And that is also what you want to see, because in wave 3 to 5 you want to see lower volume in 5 compared to 3. Now what's nice about this scenario as well is that this wave 1 would end somewhere around the support resistance area that we are basically very, very close to, if not already hitting, because we did hit the low of this little range over here as well. But that could be a very nice potential short setup to enter these shorts inside this area, stop loss safely above, trading it to the downside for then this potential wave 2, where the most common targets for wave 2 are between the 0.5 and the 0.786 Fib, sitting at 21.1K and 17.7K, with by far the most common target being the golden pocket over here, which starts at 19.6K basically, with confluence of these lows. So it could be a nice potential liquidity grab. Grab these lows over here for some liquidity, hit the golden pocket, move to the upside, potential longs laddered in this area, stop loss below at the invalidation, as we have a very, very clear invalidation over here, and then eventually trading it to the upside. Don't forget, these setups are all educational, guys, based on Elliott Wave knowledge. Then we have the bearish scenario, which then is a WXY with the Y targets as mentioned, starting at about 12.6K, but can go all the way down much, much lower. But this would be a nice first target. Also backtesting this area over here that we haven't seen since basically 2020 bull run. And if we then zoom in to wave X, where are we at the moment? Well, in wave X, we're looking for an ABC expanding flat with inside the C, a 1, 2, 3, 4, and then a wave 5. Wave 4 bounced perfectly, as you can see, on the 0.5, taken from the low of 2 to the high of wave 3. So this is very, very nice, and that was a potential long setup when we were there. But now that setup already played out, as now we are ranging inside the wave 5 most common target area, which is the 1.236 and the 1.618, pulled from the high of 3 to the low of 4. Now we are ranging inside the most common wave 5 target area, and also we do so while being in the most common wave C target area, so the yellow wave C over here, and we are very close to hitting the minimum target of usually a wave X from the all-time high to the low of W. So where we are now at the moment is a very, very important area on the Bitcoin chart, because this might be the end of wave X, wave C, and also the wave 1 in the bullish scenario very soon, before we're going to see a bit more downside on the chart, and then eventually look what's going to happen. Either we go down for wave Y, or this is then a like wave 1, 2, and we move up for then a wave 3. But this resistance area that we are at now is very important. The validation for me is over here at 34k, so that would be a potential short trading stop loss area. Entering the shorts inside this area, stop loss somewhere above and then down. Even though you can read there's a rare wave C target, this box over here starting at 34k all the way to basically 40k is still a rare wave C target. However, because this wave 3 is already extended, you do not expect wave 5 to be extended. That would be extremely rare. You would expect wave 5 to end somewhere around the more common targets for wave 5, so this area over here, which it could have done already or is going to do very soon. So if price would go all the way up here, I don't think this is the most plausible count anymore. If we then go to the medium time frame, showing you the very bullish scenario, then this is something I have in mind. So we have wave 1 over here, wave 2 is already finished. As mentioned, this wave 2 is very short, but let's at least keep the scenario in mind. And then we have a wave 1, 2 in green. So we have a 1, 2 in green with then looking for more upside for at least a wave 3 at about 40k. And then in blue, we have another 1, 2. So it's basically a 1, 2, 1, 2, and then eventually more upside to come. Now, if we at least zoom in, and I'll show you on the lower time frames as well, then for me, this wave 2 actually ended maybe over here. So then the first part of this wave 2 hit the 0.382, which is a rare target for a wave 2, but actually absolutely possible. Then an X and then a Y, with the Y actually hitting a valid target as well. It doesn't have to take this W in this WXY. So this could be a potential setup with then the 382 over here. It's a rare target for a wave 2, but as you can see, very well respected. And then from this low over here, we would then be looking for a like a 1, 2, 1, 2. We actually just more upside. That's what we, and especially more volume. We want to see volume like boom, like kicking in. And that's the problem that I have with this scenario mainly. I miss the volume. Like what I want to see, if this is a very bullish count, is I want to see like kick-ass volume. You know, I want to see big candles to the upside. I want to see big volume kicking in. Even on the 1 hour, 15 minute, I want to see those big candles coming. But it's not. As you can see on average, the volume is going down. But what I want to see is eventually I want to see a big volume spike to the upside with a big candle, and that is eventually breaking out of this structure, taking the highs and moving to the upside. As long as we don't get that, you know, the volume is simply dying, which of course is not bullish at all. We make higher highs, yeah, but the volume is going down. So that's not the best. Also, this wave 2, it just missed out on hitting the 0.382 Fibonacci. Same as this then being basically the ABC scenario. It missed out on hitting the 0.382, which the 0.382 for a wave 2 is already a rare target, just like here. It's basically rare target and another rare target, which of course by itself makes this a pretty like rare scenario, one could say. Then we go to the bearish / bullish scenario, which is quite the same as the high time frame scenario, where we are now ranging inside the target area for a wave 5, pulled from the high of 3 to the low of 4. As you can see, we have that support resistance area over here as well, so very interesting. And not to forget, by the way, we also have the high time frame range value area low that we tested twice very nicely. However, important to note is that currently we are ranging below resistance, which can be a more bullish sign, and not necessarily bullish in like, oh, we're going to the moon, but it can mean that one could potentially take the double top over here, go up, hit the higher target of the wave 5 at 29.6k, while also then hitting the wave X Fibonacci at 29.6k, which is a 0.382, and then eventually move down. Well, the potential trading setup with this setup is actually exactly the same. So wave 1 or wave X are ending around the same area over here. So the trading setup is exactly the same. Shorts laddering in this area, stop loss above, trading it to the downside. The only difference between a wave 1 and a wave X is how long do you keep this short, because for a wave 2 you would keep the short somewhere between these fibs over here before you would then expect a reversal to the upside. But for a wave Y you would expect to hold it at least to the lower levels of 13, 12K, for example. This is the only difference, and the only way we can know how long to keep this short for is based on price action moving to the downside. So based on the downside price action we get, we can like get expectations of, hey, is this a wave 2 or might this be a wave Y to the downside? Now, if you then go to the very low time frames, or the lower time frames at least, I have a couple of scenarios that I want to show you, and I will also tell you which one I think is more likely and which one's not. In this scenario, wave 5 is already finished on the lower time frame, so the whole impulsive move is finished with this wave 5 over here. That would mean that wave 5 is some sort of an ending diagonal. Now, this ending diagonal is definitely not my preferred scenario in this wave 5, as it's not clean at all. And that's mainly because of this 5-wave structure, which makes it very difficult to think this is some sort of an ending diagonal. So this is not my preferred scenario at the moment with a wave 5 over here. I prefer wave 5 here, but that will come in a second. So in this scenario, we then think this is a wave 1 to the downside with a corrective wave 2 hitting the rare target, important rare target of the 0.886. So it retraced very, very, very high to the 0.886 before then moving down once more. During the move down, this then is a wave 1, which by itself is already quite difficult to count, and also it can't be a leading diagonal, because the last, if this is then a 1, 2, 3, 4, 5, this wave 5 is too long compared to wave 3, so it's already invalid. And counting this as a impulsive structure, like a 1, 2, then wave 3 is not long enough. So this being a wave 1 is also not my preferred count actually. But for this scenario, this is a wave 1, and then we have wave 1 over here, followed by a wave 2, and then we would expect more downside. There is, however, a little thing. So if this is a very bearish scenario, because we would expect now an impulse to the downside and basically a 1, 2, 1, 2, and then boom to the downside. Also, usually, by the way, the first wave of then a bigger wave 3 usually takes at least the low of the higher degree wave 1. So you would expect maybe like a 1, 2, 1, 2, taking the low over here. That is by far more common than having a 1 that is actually not taking that low. Little extra golden nugget right there. But if we look at the CVD over here with the divergences as well, what you want to see mainly is you want to see absorption to the downside. So you want to see people buying, but you want to see it absorbed. So the bigger positions, the bigger pockets are absorbing the smaller pockets and the smaller people that are buying into the shorts of the bigger positions to eventually move it to the downside. But if we look at the CVD over here, then what we're looking at the moment is that we have, for example, over here, we have this high, right? And we have lower highs over here. So then this again is wave 1, 2, 1, 2, and you want to see it move to the downside. But if this is another 1, 2, we have a high and we made a lower high, right? Lower high on this chart, but we also made a lower high on the CVD lines, both of them, the blue and the yellow one, which is no divergence to the bearish side at all. There's no bearish divergences on the CVD at the moment, and that is what I would like to see to the downside. Instead, by the way, we have bullish divergences because we have a low over here, we have higher lows, higher low, but lower lows on the CVD, which is more bullish. Now, they don't have to play out, you know, price can fall, but of course, for potential short positions, it is more risky to trade into potential bullish divergences than if there were for some very nice bearish divergences. So it's just something to at least keep in mind. If we then go to the second scenario that I like to show you, then we have this ABC over here, where wave 5 this time ended very nicely there. Then we have an expanded flat in A, then a WXY, and then a potential B, and then a wave C. In this scenario, we are basically having an expanded flat with the most common B target 1.236 and 1.38, sitting at basically 29K to 29.3K, hitting some resistance areas before then moving down in an impulsive way. Once again, this would mean that the bullish divergences are going to play out, because we would take this double top for then this wave Y for B and then move to the downside. Invalidation is if we take the low of this wave X. Gotta say that this wave Y, however, is starting to take a little bit long. Like it needs to move up a little bit. Like this like was quite a nice structure. In an A, we have then this W, we have an X, but now Y in this WXY. This Y wave is starting to take very long. So yeah, that's it. The longer it ranges in this level, the less likely this scenario becomes. Let's just say it like that. Then we have the following scenario where we have a WXY, and also this ABC then is I don't know if it's my preferred at the moment, right? Because it starts to take so long. Then we have this, again, wave 5 ending over here, and now we have a WXY. It's a bit of a messy chart, sorry, I've been working on it. But now we have done a WX, and we're expecting a wave Y to the downside, and then inside this yellow white Y, we then have another WXY. Now I do prefer this move to the downside not to be an impulse, but some sort of a WXYXZ type of move. So as you can see right here, and then eventually looking at this for a potential wave X, and now looking for downside. There's one also, again, a little bit of a problem, and that is time. Again, it's time, just like the other scenario. Wave Y is starting to take too long, the white Y. So we have W, X, and then Y. And now wave Y is already reaching the 1.618 Fib time, taken from the high of 5 to the low of W, and then put it on the high of X. So you're comparing the time it took to form wave W to the time it takes to form wave Y. And we are currently reaching the 1.618 Fib time target, as you can see over here, which would be quite long for a wave Y, because usually the 1-to-1 is most common for a W and a Y. So yeah, we really have to move to the downside instead to actually, you know, make this more valid. And we of course have bullish divergences. So is downside expected? Not sure. But again, the more we range, the less likely this scenario becomes. And the only potential trading setup I have is trading if this double bottom is going to be taken with a swing failure trade, where we take the liquidity, move to the upside, close the candle above, and then go to the upside. Then the stop loss would go below the wick, and then you trade it to the upside. And then a bigger blue A, blue B, and then a blue C for, again, an expanded flat. Then we go to the second WXY scenario, where again this is wave 5. Then we have a WXY that's already finished, and then this is part of a bigger wave A. So we have an A looking for B, and then eventually wave C. Now, as mentioned, the scenario, basically scenarios that might move to the upside are preferred because of the bullish divergences at the moment. So in this particular scenario, it would be this move over here that is preferred. But then this has to be some sort of a three-wave structure. Now we can count, of course, 3 waves over here. So we would expect a bit of downside before eventually moving to the upside for then a wave B, and then go down for a wave C. Of course, this can also still be a WXY, by the way, which is going to be more of like a channel type of structure. It's going to be more horizontal, a bit more boring, one could say, but that of course is possible. Now this scenario, again, I said it's getting less likely as time continues. The same a little bit for this one, because you want to, this is the first part, okay, but we want to see it move down and then move up, and it shouldn't take too much time. If we then go to the very bullish scenario on the lower time frame, we have again the 1-2-1-2. And then in this wave 2, we have the WXY with inside this Y over here, again a WXYXZ. Now the 0.786 is a valid target for a wave Y compared to a wave W, because these waves tend to follow each other up between the 0.786 and the 1.38 Fibonacci. So this is perfectly fine. And we would then now expect a bullish move to the upside, which at the moment, if we look at what's happening, is not it. Like, again, I want to see volume. I want to see volume kicking in. You know, we want to see the big moves to the upside. And then the scenario that might actually be my preferred scenario. So there's two things. I prefer these scenarios to the upside, where we take the highs first, because if we really move to the downside, I would like to see some bearish divergences. However, in this scenario, those bearish divergences might still come, because this is then a triangle. Thanks to also KG, Captain Randlavella, what a name, and Kevin Canali, because I woke up this early morning and I saw some of these here. KG sharing this in Discord, as well as Captain Randlavella and Kevin on YouTube, where this is then a wave A. They have this as wave A over here, but I think it's nicer if this is wave A with the high of 5 here. And then we have a 3-wave in A, then we have a complex B, 3 waves in C, looking for 3 waves in D, and then eventually wave E before downside. Now what I would like to see in this scenario is at least some bearish divergences. If E is forming, some bearish divergences with the high of C for then potential downside. So yes, the bigger divergences is with the low over here and these lows over here. So higher lows but lower lows on the CVD, which is bullish. But if we can generate some bearish local divergences, then this becomes more plausible, let's say. So currently my preferreds would be taking the high. But in this scenario, which is definitely a scenario that I would prefer, but it's preferred the moment we do see some bearish divergences, as I would like to see that for some more downside of at least then taking the low of A in this scenario, with then being an A, triangle B or X, and then moving to the downside in a C or Y. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next video. It might be possible I can't upload at 1 p.m. due to some business stuff going on, but you will definitely see me at 7 p.m. Central East European time. Bye bye.